Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is, what is today? Thursday. Wow, our week's almost over. I've been moving, so I'm losing track of days. Today's Thursday, May the 7th. So if you're here this morning, I just want to say hi. Drop your name in the chat. Let me know you're here. Say hello. Ask me any questions or comments you might have. This is a place for learning and education, market analysis, live trading. I'm going to take trades together with you this morning if we get the right setups. But remember, these are for educational purposes only. So if you choose to follow my trades, you do that at your own risk. I'm only showing you how I do it, where I get in, where I get out, and what my thought process is. My goal here is to help you become a better trader. So, yeah, Gavilan is here. Good morning, Gavilan. Thanks for saying hi. You know I appreciate it. David Neely, good morning. Good to see you guys. All right. We are in the twilight zone, guys. We are in Groundhog's Day. Every day, it seems, we've been getting the same pattern. We get an overnight high, all time highs get hit in the overnight. Good morning, Val. The next morning, we open with a dip down and then we climb to that overnight high and sometimes higher. Now, as you can see, look at these yellow lines, guys. Every day I tell you, pay attention to these. These lines are gold because these get respected. It's not always the same line that gets respected. Sometimes it's the overnight high, sometimes it's the overnight low, sometimes it's yesterday's high of day, yesterday's close, yesterday's low of day. All of these things are valuable. And so I track them every day when I start my morning. I come out and I move my lines. I actually physically move these into place based on what the market has done in the overnight. And so that helps me keep an eye on what the market is doing. And you can sure see that it got hit to the tick, guys, right to the tick, and got a little reversal here. So now we're reversing, and let's see what we get. This has been pretty hard to trade. I'll say that, guys. The last 2 days, not today, so far I'm up, but in the last few days, this pattern has caught me. They've suckered me into this downward move, and then they pushed it to new all-time highs. So today, actually, I was able to navigate that a little bit better because I'm a little, feeling like a little bit more aware of what's going on. But it's surprising me that they keep pulling out this same play. It's just, all right, it's overdone, guys. It's time for something new. Okay, let's take a look at the leaderboard, and the first thing I noticed, the leaderboard is just my watch list. It's just, I call it the leaderboard because that's kind of what I use it for. But the first thing that pops out on the board this morning is silver up again. So silver was up, if I recall, over 6% at one point during the day. I didn't track where it closed, but it was up high. Up again today, another 5%. So that's over 10% in 2 days on silver. That tells me something could be up. Something might be up here. All right, David TC is here. We've got 3 Davids here. I love that. And it looks like Maria is here. Good morning, guys. Thank you so much for joining. All right. So yeah, silver being up like that, kind of to the extremes, tells me something could be up. It could be. We could be rotating into safe haven. That does happen. It's a thing. Silver, gold, precious metals, those are all considered safe haven assets. And sometimes when the big money is getting ready to take profits and get out of one product, they will move into another. And a lot of times we can see precious metals be the recipient of that. There are other stocks that we see or sectors or industries that we see also act as what we would call defensive. That just means these defensive sectors are a place where money goes when the market starts to get turbulent or starts to move down. So, you can see defensive sectors like consumer staples, right? People still need to buy food. They're still going to buy alcohol. They're still going to need health care. So these types of industries tend to do, let's put it this way, they don't do as poorly as, let's say, the Mag 7 might. If whenever we get to that top, whenever this thing starts to blow off, we will see some money rotating to more defensive type of rotation. Okay. What are some other defensive stocks? Yeah, Gaviline, I was just naming a couple of them: healthcare, consumer staples, even liquor. You can see that doesn't tend to move around too much. Sometimes depends on the nature of why we're crashing. Sometimes you can see financials hold up. Lots of times they don't. But also actual defensive stocks, not just defensive in terms of the market, but defensive in terms of the military and the country. Sometimes those stocks can hold up better as well. So, and again, of course, precious metals. And the number one is the dollar itself. People will go to cash. There's also the bonds. Those are considered very safe haven investments. So bonds are backed by the full faith of the U.S. government. So those are considered the safest of all assets. So you'll see bonds going moving up, and you'll see the dollar index moving up as people move into cash. I wouldn't call, obviously, cash is not a safe haven asset, of course, but people do move to cash when the market starts to get iffy, right? So anyway, all that to say, silver is really perking up. Let's look real quick at silver's daily chart. I'm very intrigued by what's going on here. It's only been a couple of days that it's been doing this strong climb, but let's see what it looks like on the daily. You're welcome, Gavilan. Yeah, take a look. Yeah, look at these two pretty good sized gaps here. I'm going to turn off my VWAP because it makes it hard to see the candles. Let's do that. Yeah, that makes it a little easier to see. And look, isn't silver kind of an odd chart to look at? It looks a bit like this kind of speckled dots, right? These gaps are everywhere on the silver chart. Gaps everywhere. You don't normally see a chart so full of gaps like this. It's very, very, very gappy. But the last few days have certainly been large gaps. Look at that. So here's the current bottom. I mean, this is the bottom, but basically here's the current bottom over here at 64. And we're already all the way up to 74. So it's gained $10 in just a few days. So strong push on silver with these major gaps here. Big, big gaps. Guy is here. Good morning. Good to see you. David Tusi, we hit the high of the day and pulled back. Well, we hit the overnight high is what we hit, David, but you're exactly right. And made a new high of day, made a new all-time high, and got a rejection right off of it, which is what I was saying at the top of the stream. You can see how important these lines are that I've drawn here, the overnight high, because we hit those. We have been hitting those, and we hit it today to the tick, and then we did reverse off of it. So you're exactly right, David. We hit that high and have reversed, at least as of now. Let's see where we come back down to. All right. Guy is in the 736 puts, got out with 25%. Okay, Guy. Nice job there. Okay, so this is silver looking happy. Now, silver has this right here. This is going to be a resistance because when it hit the previous bottom, it climbed up to 75 and reversed back down, but it made a higher low. So that's also bullish for silver. So we hit the low, we climbed, we pulled back, we made a higher low, and now we're climbing again. So what we need to do now is make a higher high. We need to beat 75. on the daily chart. And I think that that looks like it's incoming. Looks like it to me. All right, let's get back to our SPY chart and see what it's looking like. We're going to have to put our VWAP back on. All right, there it is. We have not challenged the VWAP yet, but we're getting closer. All right, David, originally had the 73.65 put, lost 50% and sold. Now in the 76.70. Good luck, DT. I hope that works out for you. All right, Tony is here. Good morning. IBM position going green. I think it was Caleb or Fred's. All right. I haven't been following that, but I'm glad to hear it's going green. Nice. Nice job there. I don't even know what IBM is doing. Let's see what IBM is doing. IBM is up. IBM is moving up today, 2%. All right. All right, Guy, as per your silver comments, holding AG First Majestic. Good luck, Guy. Good luck with that. It has yet to make that higher high, but it's closing in. So let's see. With 2 days of 5% plus gains, I think it looks like it could be on the way back up. And so is gold, but just not as quickly as silver. Miners are risky. Yeah, you're right. You're right. You're right. All right. Our next test is going to be, well, we've got the opening range right here at 735. So we've got to come back down through that. And then we'll test the VWAP, and it's sitting pretty close to our high of day from yesterday. So the bears want to get back down below that. They opened the day below it and promptly came right back over it, and they have not tested it yet. So it needs to be retested. Let's see if we get that. And I didn't finish looking at our leaderboards today. Microsoft almost at 3%, 2.89, Tesla 2.8, Nvidia 1.8, Meta 1.7, Apple 1.2, and then the mags as are up 1.1%. So pretty strong showing by the Magnificent Seven this morning, although there are some laggers. So we've got Google down about 0.4%, Amazon down 0.8%. That's about it on the laggard. The Dow has gone red. It was green earlier. The Russell is red at 0.5% negative. Who is green today? The SPY. We're sitting at 0.2% elevated, which isn't much. It's not much. And what are the Qs doing? And why can't I see them? I love my watch list. It actually deletes tickers. It's super frustrating. All right, I can't see the Qs. I'm going to have to re-add them. Qs are up a bit overhead, 0.5% plus, and we're sitting 0.2% plus. Okay. And there's NQ. There it is. Okay. All right. So where is our range? Our range is kind of back in here. We haven't come quite down to that yet. We've got to come back inside the opening range. Now, this green line is what I mark off as the first 15 minutes of the morning. So here's our bottom, our opening range bottom at 15 minutes. And here's our top, which was made right out of the gates. We gapped up into this top and then pulled down and then pulled up over it and hit our overnight high. So what remains to be seen is what we're going to do with this. Are they going to turn and push for another leg up, another leg higher? Or are we going to start to get some kind of downward move or maybe sideways to build structure? VIX is still sitting in the 17s, which is another oddity because with the markets at all-time highs, extreme all-time highs, like the highest highs, the most parabolic move we've seen, very historic rise that we've seen over the last 3 or 4 weeks. It's absolutely historic. And as far as I know, unprecedented. I think this is the fastest rise. I'll have to go back and double check my stats, but if it's not the fastest, it's one of the fastest. It's very unusual to what we're witnessing. It's unusual. So with this crazy rise, very strong, meteoric, parabolic, straight up, we should not be seeing the VIX at 17. That shouldn't be happening. But what the VIX is telling us is it's like the warning light on the dashboard. It's saying all is not well under the hood. If all was well under the hood, we would be way down in the 13s and 14s on the VIX, and we haven't seen that. Now, we did get knocked down into 16, and that was our low that we've seen for quite some time on the VIX. All right, we are moving back down, getting closer to the VWAP. We like that. All right, Dan is here. Good morning. Decided to try again. Hope all is well. Welcome, Dan. I hope you have a good day today. I know you had a tough one, and you're not the only one. I'll say that. These are not easy markets to trade right now, so hopefully you're not too discouraged. I'm glad you're trying again. It's not an easy market to trade right now, so hang in there. Hang in there, okay? All right. Let's see here. VIX is not moving up. It is on the minute chart, and we'll look at the daily chart. The point is, DT, not that it's not moving up. The point is that it's not moving down, and that's what's really striking to me. Let's look at the daily, and I'll show you what I mean. So we do see this downward trend. So in that sense, it is moving down. It has been since this spike over here, since our rise that we've been doing on the S&P 500. However, it should be much farther down. Based on where we are on the charts, we're in the stratosphere. The VIX should be way down here. This is where it should be, and it's not. It's holding. Do you see how it's holding this bottom here? It's holding this little bottom here at 16.7. And that's a little unusual given the fact that we are in the nosebleed section of the SPX chart. So that's what's unusual about it. So we'll keep our eyes on that and see what happens. If we should drop down, 15, 14, that's going to be more in line with where we are on the charts. We should be probably at 13, to be honest, but we've still got some volatility, it looks like to me, still in play. Now that was a big drop here on the minute chart. Came down to 17.1. And the other thing that's happening between the VIX and the SPY is, as you know, Of course, the VIX is the volatility index. That gives us the fear gauge for the markets. It tells us how fearful the markets are. And, you know, when that happens, when fear rises, the markets tend to go down. So in that way of thinking, the VIX and the market are running inverse to each other. The VIX comes down and the market goes up. When we see, even on a short term, the VIX running in the same direction as the SPY, you have to pay attention because something is about to change. Usually, the SPY will change direction. Sometimes the VIX does. But basically, you can think of it as someone's not telling the truth. When the VIX and the SPY are running in the same direction, someone's not telling the truth. Usually it's the SPY. Sometimes it's the VIX. So that's another thing to bear in mind, that we've seen a bit of that lately. We've seen a bit of VIX moving up while the market moves up, VIX moving down while the market moves down. Very odd behavior. And that usually tells you when that starts to happen, something could change. And it doesn't have to happen immediately. It could take, it could take a couple of days. But usually when that happens, when things get out of sync like that, we start to see changes. All right. Still trying here to attack the VWAP, but we haven't done it yet. We're back just almost to the top of this range. And if we zoom out a bit, you can see we've really been ranging for a long time. Now we did get this push, but let's zoom out real good. And look, you can see we've really kind of stayed. We did get a little dip, we got a little rise, but in general, we're staying at this average, right? This middle line. That's really where we keep getting drawn to. And that's been going on for hours pre-market. All right, here's our test of the VWAP. Let's see. Okay, nice drop. Beautiful. All right, we might consider puts here. We got to be careful and not get suckered in, but I would be looking at the 735s. Want to wait and see if we can get this candle to jump back up for us. Not in just yet. All right, I'm going to jump on the put. I am in, punch it. Remember, this is for educational purposes only. If you follow, you do at your own risk. I'm out right here, punch it. That's roughly 7%. That was a pretty quick in and out, and that is the way that I trade, guys. In and out very fast. Ideally, that's where I want to be, in and out quickly. And I'll explain why I took this setup, okay? All right, Guy is saying 735 puts, in at 109, out at 143. That was fast. Nicely done, Guy. Glad you took them. If we drop down again here, I may trade this move again, even though I don't usually trade the same move twice. I might in this case. Kind of holding right now at the little teeny low that it's made here. So I'm watching this. And we'll go over that trade. It was very fast. I'll explain it here in just a minute. All right, bouncing back up over the VWAP. Good thing we got in and out quickly, isn't it? All right. You're the best. Thanks, Guy. What a nice thing to say. Well, it's been a tough couple of days for me too. I'll tell you that. All right, Dana, 128 to 125. Sorry to hear that, Dana. Glad it was just a very tiny bit, and I'm glad you're out. All right. So let's talk about why I took this trade. There were a couple of factors. One thing that I look at is these quick long wick candles on volume. Let's see if I can make this bigger so it's a little easier to see. It's a little hard to see these candles, so let's try it this way. All right. All right, Dan, a little too quick. I get it. No worries, Dan. Val lost big. Think the delay is too long. Okay, Val. How long is your delay? I am at 11:31 and 38 seconds Eastern. Bear Palm. Good morning. First time here. Welcome. Thank you so much for joining. I appreciate that. And I don't know if you were able to catch that last trade. It was very quick, but welcome. I'm so glad to have you here. If you have any questions, feel free to drop them. There are no newbie questions, or there's never a dumb question, because I guarantee if you have the question, other people have it as well. And I'm always happy to tackle everybody's questions. All right, Val, 21 seconds. That's rough, Val. That's rough. Daniel, I'm scalping the scalpers. I did on that one, Dan. Val, maybe you need a refresh on that one. And I'm sorry that lag is so long. Yeah, that definitely, I could see why that would have hurt you, because what did it do? It reversed immediately. We only had a minute really to get in and get out of that trade. And so, yeah, the fact that you've got a 21-second delay could really affect that. So that goes for everybody. If your delay is longer than about 5 seconds, you might want to try and refresh your browser, close your open tabs. Video stream usually takes a lot of bandwidth from your your Wi-Fi, your computer. It takes a lot of bandwidth. So if you're experiencing more than about a 5-second delay, you might want to think about either restarting or just refreshing your browser. I'll give you the time one more time so everyone can check your delays. I'm at 11:33 and 20 seconds Eastern. All right, just did one, Val. Hopefully you caught it. 11:33 and 27 seconds Eastern. All right. So this trade was a little bit late, right? Because you can see for Val, beautiful. Okay, did you just refresh your browser? You didn't have to restart. You just refreshed your browser. Maybe let everyone know what you did so that if they're having any delays, they can do the same thing. Okay, thanks, Val, for that. Yeah, that might just be a good housekeeping thing to do when you're on these live streams, is to just check that your tabs are closed and your browser is refreshed. Okay, all right, excellent. Thank you, Val. Appreciate your help there. Sorry about that loss. Okay, so let's go back to analyzing why I took this trade. I'm going to zoom out a little bit so we can see what was happening. We had we had the top get hit here. We had the rejection. Now, could we have traded from here? Yes, I think Guy did actually. But here, right here, the MACD rolls over at 11:03 Eastern. This is a great entry. This is not a bad entry. We are over. So let me highlight this line. This line right here where my cursor is, hopefully you can see it. Right there where the pointy finger is. That line is the upper edge of the VWAP. That is 2 standard deviations over the actual volume weighted average price, which is this line right here. Okay. When there were a few factors here. So we came up over the outer band. That usually means that at some point we're going to reverse. Now, we don't have to. We can travel along this outer band for a long time. So you can't take that by itself. But usually, combined with some other indicators, it can act as a factor, right? So we came up over the upper band. We hit, this is the second factor, we hit the overnight high and rejected. And then the third factor is we had the MACD roll over. So that might be enough to take the trade. Those 3 factors right there might be enough to take the trade. I did not, because I'm just being a little bit more cautious. They've like I said, they've caught me a couple of times in the last couple of days, so I'm being cautious. So I waited for all the way down here a test of the VWAP. That is the 4th indicator, and it's one of the strongest. When we cross the VWAP, look what happens, right? We cross the VWAP here, we went up in a strong way. We came down below the VWAP here at the open, we went down in a strong way. It doesn't always work that way, but you can usually see some responses when we get over or under the VWAP. And so that was the 4th factor. So when I saw that we had come down below the VWAP, the 5th thing that happened was we got this big candle on elevated volume. Excuse me just one second. Okay. So the 5th thing that happened was the long red candle on elevated volume. Wasn't the highest volume. This one was pretty high. This one was pretty high, but it is elevated. You can see that it jumps higher than the recent move, right? So we've got the long candle piercing the VWAP, long lower wick, and it starts to pull up. These candles are great for trading. They will many times, they will come down and retrace all the way down to that lower wick. So a lot of times I'll take a trade like this because of the elevated volume. So again, all these 5 factors are in place. Now, the problem is when you wait for all these factors to line up, what happens? You miss the move, right? This was the end of that downward move, and that was the risk. That was the risk. We were moving down for a good bit of time, and this was the final gasp of that downward move. So we have to be quick on these, right? So I got in as what I wanted was this to pull up here. In fact, I think I got in on maybe this candle. Let me double check that trade. Got in on the 928 candle, got out on the 929 candle. Okay, little later than I thought. I thought I might have gotten in on this one, but no. So got in on this one and got out on this one. So what I was looking for was that little bit of a retrace that came back down, right? So we've got the bottom of the candle here. Sometimes they'll retrace all the way to the bottom. Sometimes they won't, but it retraced enough to get 7%, and that's fine with me. So I jumped in on the retrace and then jumped right back out. And again, you could see that it was starting to it wasn't continuing down, right? It was wanting to come back up over the VWAP. So, and that's what it did. It reversed back up. So that's the explanation of that trade. I hope that makes sense. Again, my trades ideally are very fast. That trade lasted like 30, 25, 35, 40 seconds is how long that trade lasted. And you can make 7% in 40 seconds. That's the beauty of scalping. That's the beauty of day trading, right? That trade. Do you have a directional right now? Too late, David. I already analyzed that trade. I'm sorry. I didn't see your comment. Bear Palm saying, I'm assuming you trade options. Yes, absolutely. You are correct. I trade 0 days to expiration. So I'm trading today's expiration. And those are where the biggest profit potential lies. Today's expiration at the money, in the money. I coach some people and I'm usually telling them, please do not go too far out of the money. That is going to hurt you. Those options aren't going to move in your favor quite the same way. So yes, I trade options. I trade long options on this stream. I do trade short options other places, but on this stream, I trade long options, meaning I'm buying calls, I'm buying puts, single leg, not doing spreads on this stream. Just this is more for people that they like scalping, they want single leg options, they might not have the options level approval that they need for spreads. So this is for people that like this type of quick trading and might not have options approval or knowledge of more complicated strategies. So yes, great question, Bear Palm. All right. Screen is off. Thank you, David. Let me fix that. I apologize. I do see it. I do see my screen. I'll stop and restart the screen. Hopefully, let me know if anyone else is having trouble. But I'll stop the share and restart it. Give me a second. All right. Did that help? All right. Direction on the day, David. No. Short answer, no, I don't. I think we could build structure here, meaning we could range and move sideways, especially before big data tomorrow. But no, I don't have a strong bias on the day. Could we come up and hit another all-time high? I mean, why not? It's what we've been doing every day, right? So no, to be honest with you, David, I do not have a direction on the day. I'm cautious of calls. I'll put it that way. I'm going to be careful on calls, and cautious on puts as well, because they've been burning the puts. But could be we just go sideways until data tomorrow. That is very possible. All right. Bear Palm. I've tried 0 DTE before. Those trades have to be extremely precise. They do. More than precise, they have to be timely. The biggest enemy for 0 DTE trades is time. You cannot hold these trades. And if you do, you're going to wind up losing a lot of money, because it's not like other types of trading. It's not like swing trading. It's not like trading stocks, of course. It is a race against the clock. When you're swing trading, you have time for your option to come back. When you're trading stocks, you've got all the time in the world. There's no time limit. But in a 0 DTE, you have till the end of today. And if you wait until 3 p.m. Eastern, you're going to see your time value. You're going to see your time value come down this way. But when you get to 2 or 3 p.m. Eastern, it goes whoosh. So if you haven't gotten out of your trade by then, chances are pretty good you're going to lose the whole thing. Now, can it turn and go, can you get a Hail Mary and that thing turns in your direction and boom, you just make a fortune? Yes, but you cannot hold and wait for that, because that will eat up your account. So you got to take the stops. And I'm talking to myself, because I did hold a trade to full loss day before yesterday. And I really never do that, but that was just a rare occurrence where I just didn't follow my rules as well as I should have based on my bias. And I'll tell you, no matter how long you've been trading, you always have to fight your bias. You always have to fight your emotions. It's never just, it's never just mechanical and easy. You've always got to use your mind and let your mind conquer your emotions when you're trading. So you are correct, Bear. They have to be the right trade, but more than that, they have to be timely. Okay. Okay, Daniel, my account is limited. Can't do same day. Have to use limit order. No quick market orders. I don't know, Daniel. That sounds like a real, they're really tying your hands there. And I know that you use, who your broker is, and that they're really tying your hands there, Daniel. And I feel for you. You can make money on next day expiration. You just have to treat them like today's expiration. The problem with next day expiration, and somebody has asked me this question before, does it make sense to go ahead and just buy tomorrow's expiration? Yes and no. Yes, because you don't take the hit so hard today. It moves a little bit less against you. It also moves less for you. You don't make the profit as quickly. You don't take the hit as quickly. But here's the number one problem with buying tomorrow's options when you're in a day trade mind today. If you're trading a micro chart like I am, this is a micro move. I'm on the minute chart here. These are micro moves. If you're trading micro moves, day trading them, and you're going to try and swing trade that into tomorrow, you're trading a lot of times can be on hopium because you see it go against you. You don't want to take the loss. And so the temptation is, I've got till tomorrow. I'll let it ride. Maybe it'll come back for me tomorrow. That's the biggest problem that I see in people that I coach that are trading next day options, is that the temptation when you're losing is great to hold these until tomorrow. You don't necessarily want to do that. If it's not going for you and you're down more than 40, 50%, you got to make some hard decisions. And that's tough. It's really, really hard to do. All right. All right. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Sir John Templeton, great, great investor of his time. I like that quote. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. I would say, Guy, we are in euphoria, aren't we? We're in euphoria. I'm pretty sure we are. All right, Bear. Always struggled with trading psychology more than the strategy itself. And that's exactly right. You're hitting the nail on the head. It is rarely the strategy. Strategies have to be there. I'm not discounting the importance of a good strategy, but there are many. There are a lot of strategies out there that'll get you 75, 80% win rate, a lot of them. And with an 80% win rate, you can be profitable if you manage the emotional side. And that's always the hardest piece, always the hardest piece. So you're exactly right there, Bear. All right. Let's see. The Maddie. Hello, Grace. Hello, Maddie. Good to see you. Thank you for joining. Welcome back. Guy, my bias has gotten me into trouble in the past. Now it's based on higher highs, higher lows, or lower highs, lower lows. Basically, trending strategy, Guy, is what you're talking about. And those are very accurate. Trends, when you see a trend break and or you see it that we're continuing in a trend, those are great high probability trades. So great, good for you. All right, the Maddie. DTE 5 to 8%. Is that a good trade to take? You might mean zero DTE. I'm thinking you mean zero DTE there. Yes, Maddie. And it all boils down to a formula. So basically, exactly what I was just talking about. If you have a strategy, let's say you've got a great strategy, you've got an 80% win rate, right? What does that mean? In essence, it means you're winning 8 out of 10 trades, right? You've got an 80% win rate, you're winning 8 out of 10 trades. What do you have to win to be profitable? And where do you have to stop your loss to be profitable? It's just math, simple math. If you are making, let's say, an average of 8% on your trades, on your winning trades, and you multiply that by 8 trades, now you're looking at 64%. And that's just 64% of the position size that you take. Now, if you've got 8 winning trades at 8%, and now you've got to deal with 2 losing trades. Well, those 2 losing trades, they need to total less than your 8 winning trades, don't they? So you can't have a 40% stop loss with an 80% win rate with an 8% average win. You're going to have to lower your stop loss down to 30. Then you'll be consistently profitable. It'll be a small profit, but out of every 10 trades, you'll basically win 8% of your overall position size. That's how you do that math. That's based on your 30% stop. Now, if that's unreasonable, if that's changing your win rate, if you're taking a 30% stop and now you're making more losses than you were before, now you've got to figure something else out. Either you've got to have a higher win percent or you've got to have a higher win rate. So this is the formula and you've got to pay attention to it. The math is what you need to get working in your favor. You've got to have either a high enough win rate with a win percent that totals more than your loss percent, or you've got to bring up your win percent, or you've got to bring down your loss percent, or you've got to bring up your win rate. You can only manipulate those 3 things. That's really it. There is one more thing you can do, and that's called your risk to reward. So if you're if you're trading a risk to reward, let's say we're getting a nice drop here through the VWAP, guys. Hang on a minute. Just 1 minute. We are sitting right on our recent low, right on our high of day from yesterday. I want to see a break right here. And we're breaking. I'm going to look at puts right here at the 735 level. I'm not in them yet. I'm just looking. I'm watching this candle. It's giving us some hesitation. Hopefully I gave you a deep enough analysis and explanation of getting the math to work in your favor. We'll get back to risk to reward in just a minute, but that is the only other thing you can change to get the math working in your favor. You have to have a higher win percent than a loss, or you've got to increase your win rate, or you've got to increase your risk to reward. Any of those things will shift the math in your favor. Okay. So here's the reason we wait at these levels. See what happened? Not saying it won't continue down, but do you see? I always look left. Before I take a trade, I always look left. If there's a pretty clear swing low or swing high, I watch for that before I take the trade. So this one here, we came right down to it, didn't we? Right down to it. And right now, giving us a little reversal, but it doesn't have to continue. Let's just see what we get. Russell continuing down a bit today, so that's interesting. Russell's down almost 0.8%. Dow's still kind of just sitting around at its flat line, not doing much. It's negative, but not by much. The Qs are not looking super strong either, 0.3% positive, and the SPY just at its flat line, 0.09, which is odd because, again, we are out of sync with the MAGs. The MAGs are up 1.2% today. Okay, there's a nice little drop. Let's see if we can retrace this candle a bit, or they're just going to dump. There's a nice little retrace. All right, I'm going to jump in the put. I'm in, punch it. I'm looking for a quick retrace close to the bottom of the candle, if we can get it. All right, I'm going to jump out here, punch it. I think that's about 5%, hopefully. Not going to overstay my welcome because of this wick, right? We came down, we got pretty close to it. Not saying we can't drop more, but this is a recent bottom. This is the bottom of the wick that I was trading. So we got that retrace on this candle, pretty close. I took my 5% and called it good. All right, Maddie rode that. Nicely done. Okay, and there it goes. We're going to break the bottom here, it looks like. Nicely done, Maddie. I'm glad you got that. We could have more in it. If I were to take another put, I would take it at the 735 level. We are breaking the bottom, so I might, but the move is slightly extended. No retracement here. This is just a quick dump. Hard to get in on these moves. You never know where they're going to retrace. Wow. Okay. Volume starting to pick up. We are right here at the bottom of our opening range from this morning. I'm going to zoom out. This is our first, or this is our current low of day down here at 733. But see this green line? This is our opening range. So let's see if it wants to keep coming down. We're just at our flat line, meaning we are sitting right now 1 point below where we closed yesterday. So not a big drop yet, although it looks like it on the chart. It's not a huge drop yet. Still coming down. Maddie, thank you for what you do. Well, thank you for saying that. I appreciate that. Thanks so much. All right, I cannot find an entry here. This thing is sliding. Beautiful. So nice. Wow, guys. Beautiful. What a nice drop. I hope you're happy, DT. You should be making money on this drop. This is gorgeous. I love it. Very oversold right now, so we could expect a bounce here in a minute. About time. Yeah. All right. So we're down about 5 points. These slides like this are tough to trade because if you're not already in it, there's not a good entry. I don't like to get in on a sliding red candle or green. I like to see it retrace in the other direction, and we just didn't get that. But that was a really nice drop all the way down to our opening low. So we have a new low of day right now. We have not tested the overnight low, which is sitting right here at 732. We could test that. This looks like a cute little sell-off so far. I'm going to hold a put here just for a second, but I'm not going to trade it because this was a big slide. We don't know where the bottom is at, but I'm going to hold one just to see. So right now, I'm just holding the 734. I'm not in it. I'm just looking, right? We're at a new low of day, so I don't want to trade a put right now, but I want to see what happens here. I do think we're going to come and challenge this overnight low, which is down about 10 more points below us. So if we get a nice little bounce here and then a reversal down, we could come and take another put. Too bad I jumped out of that one at, what was it, 5%? Because that was a really beautiful drop there. But that's okay. I don't worry about that. A lot of people will say, oh, I could have had more. I should have stayed in. But remember, for me, the number one goal pretty much is to get out quickly on these zero DTE trades. My number one goal is not to get the biggest profit that I can get. That might sound counterintuitive, but that is not what I'm looking for. I'm looking for small base hits, no matter how big the move, because you just don't know, right? This move here that I made 7% on, you did that was the end of it until it moved up. And then of course it moved down again. But this would have stopped me out, right? I shouldn't have ridden this waiting for this, right? You can't. You absolutely can't. And there's no way to know where the top or the bottom is, where the top of a move is, the bottom of a move is. There's no way to know what is the maximum juice that you're going to squeeze out of that orange. You can't know that. And if you hold on to every trade trying to extract the maximum juice, you know what's going to happen? You're not going to have any juice. In fact, it's going to cost you. You're going to have to pay juice. So for my strategy, not for everybody's strategy, right? For my strategy, it's small, consistent base hits. And if I made 4% on this move here, and there was another 40% sitting in it that I missed, I'm okay with that. I'm okay with that. I close my days green almost always. I almost always close with a green day. And I'm not usually hitting these mega base hits or home runs. I'm usually making those green days on my small, consistent winners. So that's just my strategy. It's how I've developed it. You don't have to trade that way. But with zero DTE, the name of the game is get in and out quickly. All right, another new low. Do I trade the cup and handle? Not so much, Bear. It's not my favorite pattern, and I don't really trade patterns in general. I recognize them. I'm pretty good at seeing them, and it'll add like a little conviction to my trade if I see a pattern, but I don't usually trade patterns by themselves. I do like the cup and handle. I when I see it, I recognize it. I like the head and shoulders. I like pennants, ascending triangles, all of those things. I see them, I notice them, but I don't trade them in and of themselves. If I am convinced of a trade and I'm seeing a pattern that supports that, then that gives me a little bit of extra confidence. All right, we are really wanting to come down, aren't we? Nice, nice, nice. It's really hard to get in here. This move could be over at any moment. Any minute it could be over. But what I'm thinking is we'll come down and test the overnight low. Okay. Nice push on the VIX. And again, we talked about the VIX being out of whack, and that is when you see the VIX getting out of whack, you know something is about to change. This kind of stuff, these rug pulls, they come out of nowhere. But you see that usually when you see the VIX getting wonky. When the VIX goes off its meds, you usually can watch for some change in the market. All right. Little slowdown here, got real close to the overnight low. This is why I'm cautious to jump in. You just never know. I'm not saying the move is over, but you just never know. So when the move is extended like this, I'm just going to let it play out and I'll wait for the next one. And you know what? The next one might not be very big, and that's okay. Usually it's not. Usually after a move like this, we get chop. Usually is what happens. Whenever this move finishes, we'll probably get some chop. I don't know that this move is done yet, but it's getting close, I think. Definitely oversold. Looks like the RSI might be trying to give us a little push up here. We are sitting at about 9 points negative, 9 points below yesterday's close. Qs are coming down to the flat line. They are just about to go red. And lo and behold, the mags are finally dropping. Isn't that interesting? Oh gosh, guys, I've gone super late. See how much fun I have here? I didn't even notice that my stream was over 10 minutes ago. It's this move, right? All right, guys, it's been a pleasure here this morning. Remember, big data tomorrow. Please be careful. Please be careful with any overnight trades. We could see the market go heavy down or heavy up. We don't know what the data is going to hold, but it is big data. Usually this data does move the market. It doesn't have to. We could get sideways, but usually this data moves the market. So we've got unemployment. We've got average hourly earnings. We've got Michigan consumer and inflation expectations. And we've got the labor report. So a lot coming out tomorrow. It does have the potential to move the markets. It'll be pre-market. So just be aware of that. Be prepared for that. It could definitely move the market. So we'll be back again tomorrow here at 11 a.m. We took a couple of trades together that did very well. And I'm green in my account. I hope you are as well. I appreciate you so much. Bear Palm, thank you for streaming. Thank you for joining and welcome again. All right, guys, see you tomorrow, 11 a.m. Eastern. Bye for now.